Good day, everyone. Thank you so much for joining us today. My name is Natasha Boric. I am Head of Public Policy and Positive Impact at the Finance for Biodiversity Foundation, and I will have the honor to moderate the webinar today on nature ambition in sovereign policies and financing strategies. So our webinar is part of the webinar series We Need to Talk About Biodiversity, co-organized by the EU Biodiversity Business and Biodiversity Platform, the UN Principles for Responsible Investment, UNEP FI, and the Finance for Biodiversity Foundation. So today, to talk about nature ambition in sovereign policies and financing strategies, we have a full lineup of speakers that will share their diverse perspective and vision. We stand at a crucial moment during UNFCCC COP30 and looking ahead next year at UNCBD COP17, where we need a renewed ambition to close the biodiversity finance gap. So all together, we are going to share our collective ambition in that direction. We are going to start with an introduction on what to expect from COP30 on nature and finance and the high-level outcomes of the PRI in person from Stephanie Strange from UN PRI. I will then have the honor to launch the new FFB report on sovereign debt nature assessment model. And will then give the floor to my colleague, Diane Roissard, for a panel on nature into sovereign debt analysis and policy engagement. We will then open our perspective with a presentation on the potential of sectoral transformation pathways by Vasily Goumas from WWF UK. We will have the opportunity, the time for questions at the end of the meeting. Please feel free to write them down during the webinar, and we will be happy to prepare for them. And my colleague Diane will introduce our panelists at the time who made us the honor to join this important discussion. Overall, thank you everyone for joining us today, and I will now turn to Stephanie for the introduction.
Thank you, Natasha. Hi, everybody. I'm Stephanie Strange, a nature specialist at PRI, and I'm going to briefly walk you through what to expect from nature and finance at COP30 in Brazil. To set the scene, I will touch on the significance of COP30, then I will highlight the key messages and outcomes from PRI's annual conference, which was held last week in Sao Paulo, before diving into the key areas to be aware of for nature and finance at COP30. So COP30 kicked off on Monday in Belém and finishes at the end of next week. It's been dubbed the Implementation COP because it's a chance for real action on climate to be agreed through the mobilisation of capital with an emphasis on nature-based solutions. This COP is a significant milestone for countries and the UNFCCC for several reasons. Firstly, this COP takes place 10 years after the Paris Agreement in 2015. Also, it's the third round of nationally determined contributions, which were due by the end of September, and the success of those being received are to varying degrees of alignment so far. And then lastly, this is the first COP that is being held in Brazil or any Amazon country, which is significant because tropical forests play a particularly important role in achieving global climate and biodiversity targets. So firstly, some key takeaways from PRI in person last week. That included some priority asks for COP30, such as the phasing out of fossil fuels, particularly the subsidies, and redirecting them to support clean energy and resilience, creating investable approaches to NDCs, and building strong, credible policy frameworks to attract private capital to emerging markets and developing economies. Looking closer at nature and finance at COP30, a large area of focus for this COP will be the importance of nature for solving the climate crisis. Tropical forests are especially essential for the transition, reducing emissions and building resilience. And to implement this messaging at COP, there will be a focus on the recommendations of the first global stocktake, which assessed the state of climate progress towards Paris. This included an emphasis on conserving, protecting and restoring nature to meet both the Paris Agreement and the Global Biodiversity Framework. And it also looks to implement Indigenous knowledge and systems to achieve those recommendations. There will also be an emphasis on synergising the 3 Rio Conventions, climate, biodiversity and desertification. And this includes bringing nature into climate transition planning and aligning nature and biodiversity targets to countries' NDCs and NBSAPs. The presidency is also highlighting the need for Indigenous people and local communities to be embedded in the collective efforts of governments, civil society and the private sector to demonstrate that respect for Indigenous peoples and their rights, which includes free, prior and informed consent, is to be foundational to all credible, equitable and rights-based climate strategies. There's also a critical need to unlock and accelerate private capital flows to emerging markets for the global transition to succeed. And nature-based solutions can provide 1/3 of the carbon reductions needed by 2030, which Brazil is the heart of that opportunity. The most notable examples of how this is being brought to COP is through the launch of the Tropical Forest Forever Facility, or TFFF, which is a pay-for-performance mechanism that will use a blended finance structure to reward tropical forest countries for reducing deforestation. The fund aims to raise a combined US $125 billion through a sponsor tranche and a senior debt tranche. And the fund works to attract institutional investors through high yield returns generated by AAA-rated debt, and also through having a first loss bore by the sponsor tranche. So far, we have seen Norway, Brazil, Indonesia, France and Portugal committing, and they have committed a combined $5.5 billion to the fund so far. Another initiative supporting this is the Capital for Climate's COP30 mobilisation, which seeks to identify $5 billion in allocations for nature-based solutions in Brazil to implement projects across regenerative agriculture, agroforestry, restoration and bioeconomy. And the aim is to scale this sector to cover greater than 1 million hectares by 2030, while leveraging the pipeline of qualified Brazilian-focused funds and vehicles and projects. And lastly, Brazil's action agenda, led by the Climate High-Level Champions, which is the operating system to connect everyone in the real economy to implement climate solutions. There's 6 pillars across 20 work streams, and the progress of those will be shared at COP30, including a granary of solutions across those pillars. So that is all from me for now. There are some further reading resources that you can look at on our website for more. Thanks for your time. Back to you, Natasha.
Thank you very much, Stephanie, for your insights and information. I hope to continue building on the ambition that is now displayed at COP30. We wish them all the success possible. To build on this ambition, I am honored to launch today FFB's new report on sovereign debt nature assessment model, integrating nature into sovereign debt. So first of all, a quick reminder that the Finance for Biodiversity Foundation structured the Finance for Biodiversity Pledge, which now gathers more than 200 financial institutions representing 23 trillion euros in assets, committing to the integration of biodiversity into their practices. They also call on global leaders to take effective measures to reverse nature loss this decade and to ensure ecosystem resilience. So based on this strong message, I would like now to focus on sovereign debt, a cornerstone of financial markets. Sovereign debt is one of the largest asset class in the world, representing around 100 trillion of US dollars. It is the backbone of financial institutions, shaping financial stability and development worldwide. Unfortunately, when we look at the link and the practices between nature and sovereign debt, we identify a real blind spot in the market. Even though we know that more than half of the global gross domestic product depends directly on nature services, even though we know that biodiversity loss undermines economic fundamentals, eroding growth, trade, and fiscal balances, and debt sustainability, still, sovereign debt markets overlook nature-related risks. So our response with the Finance for Biodiversity Foundation has been to convene a dedicated working group. So it started in early 2025, but after preparatory discussions last year at COP16, maybe some of you attended the event in our pavilion. So the working group is composed of 15 members from pioneering financial institutions led by Amundi, with the focus on integrating nature into sovereign debt markets. The first deliverable of the working group is our sovereign debt nature assessment model. It is the first structured methodology to identify nature risks and opportunities into sovereign analysis. It has been developed collaboratively by financial institutions as well as research partners. And the overall goal is to align with the ambition to implement the global biodiversity framework. So now we can take a look at the model itself, the sovereign debt nature assessment model. So what you can see is that it is composed of 3 pillars, gathering characteristics and indicators that inform the characteristics, and for each indicator pointing out to a public open source dataset. So the first pillar is about the state of natural capital. We assess the extent and significance, the integrity of ecosystems, and look for opportunities for protection and care. The second pillar is about socio-economic activities. So understanding the economic exposures to impact and dependencies and translating this into macroeconomic indicators, added value, import, export, and employment. We also look at environmental pressures from human activities. The third pillar is about governance responses. So this is about commitment and actions, regulations addressing drivers of biodiversity loss and water governance, and looking at resources and implementation. So altogether, those 3 pillars, 42 characteristics and corresponding indicators, they build a country profile. Maybe not the full picture of a country's relationship with nature, but a profile, a picture that is useful for decision-making for investors and for sovereign issuers. So before going deeper into the pillars and the model, I would like to show you how the model interacts with other frameworks and how that can inform our analysis, our understanding of the information coming up from the model, from the resulting country profiles. So first of all, the model is influenced by external factors, the drivers of natural loss from IPES, and the ambition of the nature positive goal, the mission of the global biodiversity framework. Then you may have recognized with our 3 pillars the state pressure response framework of the OECD. And this framework, what it gives us is also a relationship, a way of understanding how the different indicators can interact together in terms of information, responses, resources, pressures, and that is going to help us at the time of analyzing the results and understanding the results. Finally, in terms of alignment, something that we see is a potential alignment with the TNFD LEAP approach. So the first pillar, state of natural capital, it's really location-based, understanding what is happening on the ground. The second pillar, socioeconomic activities, it's about evaluating, assessing the situation. And then finally, governance responses, it is about answers, finding solutions, preparing solutions. This is the three pillars, the model that we present today. So if we want to go a little bit deeper, I can't cover all of the 42 characteristics that we present, but I wanted to tell you. So first of all, that a full picture could include hundreds of indicators, but we really wanted a tool, a practical tool model that can be used by financial institutions. So we reached the number of 61 indicators. A reminder that each of them links to an open source public dataset. So from here, please note that this is open for consultation. This is our first deliverable and the first version of our deliverable. We really want to learn from you what you think about it and the limitations that you find, because us too, we are calling for development in the market. There are limitations with the tools that we recommend, with the data coverage, data quality, and we all want to progress together. For example, in our next steps, we would like to explore more macroeconomic indicators, mixing economic and nature information. We would like to explore footprinting tools at the country level, and also more risks and modeling cost benefits of restoration. So a lot of items to explore, and we really look forward to working on this together with you. So in terms of practical applications of the model, investors can use it for risk screening, policy engagement, capital allocation, and sovereigns can use it to translate biodiversity into debt management. As a reminder, it's not a rating, it's an analysis and dialogue model. Thank you very much for the kind comment in the chat. So in terms of next step, we are really going to pilot the model with financial institutions, with our members. So if you're a financial institution interested in piloting, joining us in this endeavor, please reach out to us. We're going to build country profiles and build a methodology to analyze them and develop further guidance on engagement and investment. By investment, we mean both nature-linked products and broader nature-positive criteria. So I am reaching the end of my presentation. In this slide, you can link to directly access the publication, the executive summary, the full report, but also our questionnaire open for feedback until 31st of January. As I said, this is a first step, and we would be delighted to continue working on this model and piloting and all the work of the working group to come with you. And to conclude, we would be honored to invite you to the Finance for Biodiversity Summit from Pledge to Progress on the 4th December in Amsterdam. Please join us to connect, learn, and collaborate with leaders shaping the future of biodiversity finance. It would be an honor to meet you there. You can explore the program and register through the link and the QR code. This is all for me. Thank you so much for your attention, and I can't wait now to hear about our panelists with the moderation of my colleague, Diane Roissard. Turning to you, Diane.
Thank you very much, Natasha, for that clear and insightful presentation of the model. We'll now open the discussion on how this model came to life, what it tells us, and where we go from here. Integrating nature into sovereign debt analysis is still a new frontier, and this model we've just seen marks a major step forward, translating complex nature dependencies and impacts into decision-useful information for investors and policymakers. To discuss that today, I have the pleasure to welcome in this panel 4 outstanding speakers. Gaëlle Blanchard from Amundi, who's been closely involved since the early stages of this project and brings the investor perspective on applying such insights in sovereign assessment and engagement. We also have on the investor side Paul Reis from Robeco, another leading investor working on integrating nature into sovereign debt assessment. We also have Sylvain Lutz from ASCOR, assessing sovereign climate opportunities and risks initiative, that has been a real source of inspiration for us in the creation of this model. And Julien Callas from the Agence Française de Développement, which model on nature risk has been at the forefront of embedding nature in sovereign assessment. So let's get started. Gaël, you helped Finance Biodiversity develop this assessment model. Thank you very much for your leadership. Can you please tell us why this project and the resulting model are important to you and your organization? And how do you see us progressing, moving forward to further support the integration of nature into sovereign debt analysis?
Thank you, Diane, and hi, everyone. Yes, indeed, this is a really important project for Amundi and for me as an ESG analyst covering sovereign issuer, as we want to include nature and biodiversity in our sovereign debt assessment process, as we do for climate and sustainability in general. But nature and biodiversity are quite complex topics. And the financial institutions clearly need guidance to properly analyze them. So there are already some frameworks existing on this topic, but more dedicated to the assessment of companies. So a model for countries was really something that was missing. So this model clearly will help integrate nature into sovereign debt assessment in a way similar to what the ASCOR framework provided in terms of the climate risks and opportunities at a country sovereign level. It will allow us, I think, to better understand the materiality of nature and biodiversity for countries' economy and for the long-term debt sustainability, and also the impact of a country's activity on nature, not only within its boundaries, but also more globally. Still on the model itself, I want to highlight that it does provide not only a guidance, a framework for analysis, but also a catalog of the most relevant data and where to find them. And this is really something important because data are key to put in place processes, etc. So this is, I think, something really useful because you can't find data, but they are very dispatched everywhere. And so that I think that it's going to be really useful for financial institutions. Regarding your second questions about how we will move forward from this first step, I think that clearly that now we have this assessment model. Maybe it will be improved and enriched with your feedbacks to improve it. But it's clearly the idea from an investor perspective. It can contribute to different things. Obviously, the risk and opportunity assessment at country level. It will help also in the investment decision process, and also it can help for developing thematic investing. And clearly, it's also very important for engagement with sovereign issuers. It will help us prepare that properly and ask the right questions and exchange really efficiently with sovereign issuers. So overall, it's a strong basis for a financial institution to develop their own toolbox for their specific use and implementation. So next step for me, I think we need to develop examples and use cases of this assessment model in order to help its appropriation by a financial institution. And we also need, in terms of the data sets, maybe a way to better access the data. I mean, we will need maybe something more centralized in terms of data, easier to find and to use them. So that's the big picture for now on my side.
Thank you very much, Gaëlle. We're really looking forward to these next steps indeed. And I'm now turning to you, Paul. You've also been an active member involved in the bottom-up development of this assessment model. Thank you very much for your support. What is your perception of this model and how can it support your work at Robeco?
Yeah, first of all, thank you for hosting the working group. I thought it was great being part of it. Very inspiring and thoughtful discussions there. So that was very good. And to your question, so at Robeco, we've quite a long-standing foundation when it comes to sustainable investing, including in the sovereign debt space. And basically, when we conduct our investment research, we focus on 3 core pillars. So that's the financial health of countries, macroeconomic development, but also very importantly, sort of the ESG dynamics that we see in countries. Now, and for that last pillar, quite a while ago, already 15 years ago, when there was not really a good solution in the market, we developed our own proprietary sort of ESG framework. And of course, that has changed now, that landscape. There's plenty of options in the market, but we really like to still do this in-house because it enables us to better understand the ESG dynamics in countries. But most importantly, it really also forces us to have a view on what metrics are most relevant. Now, and we are well aware of the financial risks of biodiversity loss in sovereign investments, but also the role of investors in supporting nature action. So taken together, biodiversity and water and waste comprise for around 15 to 20% of the overall weight of that whole ESG framework. And we already have quite a number of sort of metrics that speak to the state of biodiversity or of nature in a certain country. And it can be both terrestrial and marine-based ecosystems. And it largely corresponds with the first pillar of this guidance. So that already forms quite a holistic picture of sort of the current risks and opportunities that we see for countries. But I guess what it could use a bit more is that forward-looking perspective in terms of the commitments and the ambitions of countries and sort of metrics that speak to this. And actually, most importantly, what are the concrete policies that countries are implementing? So the tangible steps that they're taking towards nature preservation ultimately, because that speaks to the credibility of those commitments, and it really sheds a light on sort of the likely future state of ecosystems in those countries, and again those related risks and opportunities. So that's really where I think this framework and guidance has a lot of added value. I think it's great how it sort of brought everything together that's already going on in the market, and I really hope it will truly support the broader investment community to further embed nature assessments and analysis in their investment processes, because that's what's ultimately needed. And I'll hand it back over to you. Thank you.
Thank you very much, Paul, for sharing your perspective. And we are very aligned on your ambitions and wanting to see this assessment model translated into real-world actions. I'm now asking Sylvain, thank you, first of all, for joining this conversation and for your help in reviewing our model. ASCOR has been a great inspiration for us. Can you please tell us more about it, but also how you see our work in its current stages? And let us know also how you see approaches for climate and nature interacting. Thank you.
Thank you very much, and thank you for having me. It's great to be here, and we're really excited to see the framework being launched in the consultation. So I'm from the Transition Pathway Initiative, Global Climate Transition Center, long name, but at the London School of Economics, and we're the academic research experts of the ASCOR initiative, which has been mentioned a few times here, and it was created for very similar reasons a few years ago when the focus was on corporate climate action and not really moving yet to the sovereign space. And now we find ourselves in a similar position for nature and biodiversity. And as you mentioned, quite similarly, climate data to nature data can be fragmented, inconsistent across sources, but it probably faces slightly less of that than nature data. And so the ASCOR tool was created as a publicly available and independent data set designed to serve as a kind of touch point for investors to understand national climate action and progress. Similarly, at the moment, we have kind of three pillars that splits this off into what countries are doing, what are their historic emissions, what are their ambitions and targets, and then the policies and then financial actions that they're taking to put those targets and actions into place. And when I look at the new model, the sovereign debt nature assessment model that you guys have created, I see a really similar kind of breakthrough emerging for nature. The report really emphasizes that the biodiversity and ecosystem loss and damage are significant macroeconomic issues for countries, and there are significant risks and will and possibly already are affecting the creditworthiness and growth potential of many countries. I think it is really nice to see the mirroring in the logic with the indicators across pillars. And I think just the simple fact of having a framework really starts the conversation and allows investors and sovereigns to talk to each other with a kind of independent touch point that's really helpful. I think the ASCOR framework has really emphasized this over the last few years. It's grown from the kind of initial 25 countries now to 85. And that's creating all sorts of new use cases. We're now at 100% coverage of three of the major sovereign bond indices, and that allows for integration into directly into kind of reweighted portfolios for sovereign debt. Paul from Robeco was on a panel yesterday discussing exactly that and how ING, FTSE Russell, and Robeco have partnered to create a sovereign adjusted climate index, and then Robeco has built the exchange traded fund off that. And that's a use case that just isn't possible without a consistent framework that's updated regularly and updated over the years. I think we are also seeing sovereigns start to use the framework, so I think that's a great thing that can also be something that happens in the future with the nature framework. And I think we thought about nature when building this framework, but it really deserves its own framework, and so that's great to see it getting the attention it deserves. Obviously, nature and climate are very related issues, but they're both incredibly complex, face different data challenges, different local realities, and different ways to compare the data across countries. So it's nice to see a framework come out focusing on nature, and the impact of these frameworks, I think, goes beyond just the measurement. It creates a shared language between sovereigns and investors to track progress towards the transitions that we're all hoping for, and ultimately help create the more stable and prosperous macroeconomic and social conditions that allow business to thrive in countries. So in many ways, the frameworks are quite complementary. I'll pass it back to you, but very happy to see this development.
Thank you very much. I also am quite interested in the topic of data, and I'm wondering how you perceive the challenges that we face in the development of our project, and if they're similar or different than the ones we face for climate.
Yeah, I think both climate and nature face significant data consistency challenges. I'll maybe talk a little bit about the climate challenges and just emphasize that they're probably 10x more complicated for nature and biodiversity. In just like the IPCC has a consistent emissions framework that we can use to understand and compare emissions across countries, and even that has its own problems. Different countries report different categories of emissions, and have to harmonize that and get it together to compare countries. With biodiversity, there's not a single indicator like greenhouse gas emissions that kind of gives you a sense of the overall progress. At least for transition and transition risk. There's many indicators, many species, many things. Even a tree, if you look at forest coverage, might be different if that tree exists in an urban area or a a rural area, or in England versus Brazil. So more kind of consistency challenges about the importance of certain indicators and how they differ across space and nations. The challenge that we have, and I think Paul hinted to this in terms of the forward-looking prospect of what we do at ASCOR and what the Finance and for Biodiversity framework looks at, is in that policy pillar and the government response pillar. Countries have very different policies and different ways of addressing these issues, and so there is a significant challenge in understanding and bringing that data together in a comparable way. And so, we've opted for kind of yes or no questions with sources and links. And I think some of the work that you're doing will really help that comparability. But it is a challenge to define a question that is applicable across countries, broadly standardizable, and then can be understood by the investors that want to use this data, and also impactful and meaningful on the transition. So that's, I think, a significant challenge. And then getting the information to assess those questions is the next challenge. And we dedicate a lot of analyst time to do that. We have annual cycles that include consultations with the countries, and then really the next frontier for this, and probably both climate and nature, will be kind of AI-assisted analysis, which will help us harmonize and gather and analyze more data across a larger set, but that comes with its own risks and challenges and needs to be approached very carefully. So I hope we can continue to collaborate in these kind of climate and nature frameworks and learn from each other about where we're going to accelerate climate and nature finance. Thanks.
Thank you very much. Very insightful, and definitely some food for thought to keep in mind for the next steps of this work. I'm now turning to Julien. You have supported our project since its inception, and Finance for Biodiversity has greatly benefited from our discussions and debates all along its development. How do you perceive the results, and what next steps would you recommend for us, but also for the market more broadly?
Yeah, thank you. Thank you for inviting me. On generally speaking, first, if you allow me, I would like to say that it's good to be here today as we commemorate dark times in Paris, and it's good to see that we celebrate an initiative like this, which is about to make the world better. And again, I think I agree, the framework is very useful. I think it can help a lot to progress. And I think this is a really, really important starting point. As I told you, and as you know, we have developed a methodology at EFD to assess, nature-related risk that we are using for more than 1 year, which is very well aligned with what you're suggesting. And our sovereign risk department is testing this methodology for 1 year for more than 45 countries now. And by the way, I used to say that I am happy to say that we should release early next year, I think, one first report on that kind of analysis, and we are very happy to share it and to discuss it. On the methodology itself, I would say that this is really important, again, but we need to recognize that this is only a starting point, and particularly for us, as you know, we are a public development bank. We have a specific mandate to finance, sustainable development, and particularly climate and nature transitions of the countries where we are working. And in this regard, when you start to use that kind of methodology, you really look at, the more risky countries are really, sometimes overlapping with biodiversity-rich countries. And then you have these questions. Are we working to try to divest from that kind of countries, or do we work to try to better understand how we could do better? And this is really where we are at the moment with all this methodology that we are using. And we are really using them to engage the issuers and try also to engage in a dialogue to try to support their efforts to reduce nature-related risk, in fact. So I see really it as the next step for us and for probably the colleagues and the markets. Again, the methodology are only emerging. They have a lot of improvement still to integrate. And while we are progressing on this nature risk analysis, I think also we need to recognize that we need to also use that kind